G'day folks, welcome back to another update for Bitcoin and Ripple. Now we're still in a bearish scenario on the daily charts at least, with a slight bullish retrace in play. Before you go any further, make sure you hit that like and subscribe button to support the channel. Also reference a +1 video to get a deeper dive into some of the trading strategies we're covering today. In terms of the outlook, Bitcoin is showing a cautiously optimistic setup with institutional accumulation, favourable seasonal timing and macro tailwinds, rate cut expectations, risk asset demand, pushing it toward the US $120,000 to $125,000 region in fourth quarter. But it remains exposed to downside if support breaks or global risk aversion spikes. Meanwhile, Ripple is at a more speculative inflection with the prospect of ETF approvals and utility developments underpinning upside toward the $3 to $5 range, though it faces meaningful technical resistance and remains exposed to regulatory macro setbacks. So looking at Ripple first, you can see here on the weekly the price has broken through the moving average range, and so has the CCI, and that was the effect of after this bearish divergence, lower highs on the CCI versus higher highs on the price, broke through our 23-38% Fibonacci range, and it's currently sitting around the 38% range at the moment. So bearish on the weekly, also bearish on the daily. You can see there it's well below the moving averages of the price and the CCI, but notice the CCI is touching the moving average band. So if you're trading on the daily, you want to be closing out your positions at the moment if you're going short, since that's touching that moving average range on the CCI. That gives you an earlier exit rather than waiting for the moving average range of the price to be penetrated. So bearish momentum on the daily, which means you go short only on the 1 hour chart. Now here we've had a couple of bullish divergence. So you would have been going short during this period, and the first warning you had was to that point. You could have got out of the trade at that level, and then you had a second warning there before the price started breaking through to that Fibonacci 23-38% range. And just to measure that, you take it from that low, let's take it back to that high, and that's at 23-38% range we identified as the target range. Now if you go look at the back test, going short here from about the 7th of October, and that's here on the 1 hour chart as well. You would have taken these short positions whenever the CCI and the price are in a downtrend, the moving averages, and you close out your positions whenever you see the moving average of both CCI and price start bending up on the moving averages, taking further short trades, etc. And again, using these bullish divergence, that gives you an early warning to start getting ready to exit if you see those. And you might have held a position or two there, but at least closing it out with 1 or 2 contracts, but at least you would have been still in a positive without getting hit with this drawdown. So for Bitcoin on the weekly, that's also broken below the moving average range on the price, and the CCI was already in that decline, and that was giving you an early warning because of this bearish divergence. Again, that's hit that 23%, 38% range, Fibonacci range on the weekly chart. The daily is also bearish, similar to Ripple. That CCI hasn't quite reached the moving average range yet, but we'll check it out on the 1 hour chart in a second. But again, you'll be getting ready to close out your positions once you start seeing that moving average range turn if you're trading on the daily. And what we also look for is any divergence, and there's none there. Looking at the 1 hour time frame, and you can see there we had a bullish divergence as well. We had a smaller one back here before our last video, higher lows there versus lower lows there. That hit the first range of Fibonacci, 23-38% range. Just to demonstrate again, that was from that low to that high. That's a 23-38% range. But then we extended it down to that level once that was showing another bullish divergence, and that also hit that range where we are at the moment. So at the moment, it's bullish on the hourly, but again, we only take short trades in accordance with the daily trend, so you don't go long and wait for these for both the price and the CCI to break below those moving averages to start taking short trades again. And showing you the benefit of that on the 1 hour chart for the back test, going short during these periods, again paying attention to these bullish divergence. You would have closed out your positions when you see those moving averages go against you, going short again, closing it out when they go against you, etc. And again, you wouldn't be holding any short positions at the moment with that bullish move. For some added benefits, consider subscribing to the Patreon page where we look at weekly shares, and this is the shares we've covered so far since about the 21st of September so far this year, returning 8.95%. And in dollar terms, we traded small amounts, about $5,000 per trade, and that's generated about $3,351 in return. So again, consider subscribing to the Patreon page, at least on a free trial. That's links in the description below. Thanks for watching. Hit that like and subscribe button, and we'll see you in our next update.